Hello traders, welcome to the channel. For today I want to cover some of the stocks or the equity market and share with you some of my insights based on the patterns that the market tends to form. And at the end I hope you may say the content that I share here brings some value to your trading methodology or trading process and your trading journey too. So I hope at the end it brings some value to you. So let's start with Amazon. We saw a nice bearish shark pattern completed at 186.65. So this is the 161.8% Fibonacci extension of the last swing high. I always pay attention to this type of price movement. We have the previous support level and the price breaking below the support and suddenly recovering the support. So basically we have what we may call at some point a false break of support that will be confirmed, as I said multiple times, if you are paying attention to the channel. The confirmation of the false break of the support will only happen once the price breaks above the previous fractal resistance level. And once that happens, we confirm that false violation of the support. Usually that false break of support, or inverted with a false break of resistance, of course, guides us to the golden Fibonacci extension of the last swing low in this case. So in this case we have a bearish shark pattern projected at 186.65, which is the golden Fibonacci extension of the last swing low. Completing the sequence, I was expecting a reaction to the downside, so a pullback, and as we can see, Amazon has found some support at 155.67, basically the 38% Fibonacci retracement level. If you pay attention to these Fibonacci levels in the middle of this range, so we have already a range between, let's point to these highs at 201 resistance and 151.61 as support. So basically we are now facing the 61.8% Fibonacci retracement of all these moves to the downside. This is an important Fibonacci level to consider, and of course if you pay attention to these to all these price structure, we can also consider a eventual cup and handle pattern formation. So we have the cup, we have the pullback to form the handle, and at some point if the price breaks above these highs, should trigger that cup and handle pattern formation. So we are talking about a huge projection above the resistance level of 201.20 cents. That's the most recent resistance. So pay attention to this cup and handle pattern formation if the price breaks above, but also consider the golden Fibonacci retracement level. If the price starts to pull back again from these levels, eventually it may struggle for a while before attempting to break the highs. Let's also cover Adobe. We have also some, I projected this pattern before, I shared these charts earlier, and I was expecting, and I still expect, this reaction to the downside based on the technical double top and the bearish 2618 setup. So usually that setup produces kind of an ABCD pattern. So as you can see, we have also an ABCD pattern projected below at 378. That's the default projection, or let's say the minimum criteria to complete the ABCD pattern, the 127% Fibonacci extension level, and which points to 378. So that's a symmetrical projection. Of course, there's always the possibility for the market to trade opposites. So, and if that happens, we will pay attention to the violation of the highs. Eventually, we will talk about a retest or an approach, an attack to the previous fractal resistance, 699, most probably that's what will happen if the price breaks above this level of resistance at 638. So I will expect a move and a retest of these previous highs. If not, until there, I'm still waiting for the pullback from the golden Fibonacci retracement level at 61.8, based on the technical double top. Actually, I can show you also, I forgot to mention this. We can see that same price behavior on Amazon from earlier in the market. So we can see this kind of a double top. We have the neckline. Once the price breaks the neckline, it forms a new support level, and then it bounces to the golden Fibonacci retracement level. And once the price touches a 61.8% fib, we face the bearish 2618 trade setup. Usually, as I said before, usually the market produces something similar to a symmetrical projection. So from the golden Fibonacci, we clone the previous swing, the first one, and we project a move towards a new lower low. And that's exactly what happened on Adobe. We have a technical double top in a lower scale. In this case, we have a new fractal support, 433, and then bounce towards the 61.8% Fibonacci level. Of course, there's always a risk, as I said before, for the market to invalidate that sequence. There's no interest to go at those levels again, so in the market will break the resistance level, invalidating the sequence. So we already know what to do if the market fails, but this is a nice sequence to try, and which offers, of course, a nice and friendly risk-reward approach. So why not try to do it? Another option, of course, if that happens, is to wait for a buy opportunity once the price completes the bullish ABCD pattern and try to maximize your profits from these lows. So that's just a few options for Adobe and Amazon to start with. So let's change into Bank of America, another one that I shared before with you, 4261, 224% Fibonacci extension, and the retracement towards the I was expecting the 50% Fibonacci level. Actually, as you can see, just a few points above, we have new support representing nothing more than 17.69% fall from this 224% level. And as we can see, not the golden Fibonacci, but we have the 50% Fibonacci level now acting as pressure element of resistance at 3980. I will not be surprised to see the price entering kind of a consolidation inside the range. For now, let's see how the market will behave. Let's move to Citigroup, another one that I was expecting the golden Fibonacci extension level to offer some support, failed just by a few points, and another one to monitor at least the Fibonacci levels between the 50% and the 61.8% level. As I said before, for Bank of America, eventually a small process of consolidation above these levels. Let's see how the market will behave from here. Nothing more for now to discuss. We need to see how the next wave or next leg will unfold. I need to see how the market unfolds from here. Now we have this day threatening the previous lows from October 2023 last year. So we are now bouncing from the 88.6% Fibonacci retracement level. I'm paying attention to a potential bounce towards these Fibonacci retracement levels, bounce towards the 38% Fibonacci retracement. It seems reasonable. Actually, a retest of this channel or this descending channel will not be a surprise. nothing more to report. Electronic Arts, also another one that I shared a long time ago before with you. The golden Fibonacci level, structure support offering nice pressure to the upside after completing this red bullish sharp pattern. And as you can see, we have a new historical high above these February 2021, and it looks like we will keep moving higher at mid-long-term projections. Ford, just to mention, we have a nice structure support of this channel. We are trying to bounce from these levels. Again, I was expecting it's just a few points below the sharp pattern to complete the 9.41. Failed just by a few points, but the market is starting to move and eventually towards the default 50% Fibonacci level, which points at $12.13, basically 50% recovery for the Ford. Now we have FedEx, also another one fighting the 50% Fibonacci retracement of the last swing high. We have already some projections here, and this is a good example to train your brain into this kind of price action. I'm trying to pick my lines here and somehow I'm not being capable, but it's nice to train our high into this type of situation. So we have the previous resistance level, we have a threat to break above these fractals, and suddenly the market starts to recover the previous resistance level. So this may trigger a false break of resistance. As I said initially in this video, we need to wait for a confirmation of that false break of resistance. Usually we wait for the clear violation of this support level. If that happens, the market should search for the golden Fibonacci extension level. That points to 198.58. Of course, we are far away from those from that event to happen, but pay attention to that possibility also. Of course, there's no need to mention that a violation above these highs may trigger the continuation of a move to the upside, so there's no need to reinforce that idea. So we have also GFI Goldfields Limited, something that I also enjoy to track. I'm waiting for the violation of the highs. I believe it will trigger a move to the upside, and I will target the golden Fibonacci extension level. That points to $22.44. That's the move that I'm expecting to see if the price breaks above this fractal resistance. So based on these ratios, these Fibonacci ratios between the previous highs, the pullback, we try to emphasize this move, this small bounce. Between these ratios, I can already project that move towards the highs if the price breaks above. So, but I still need to wait for the violation of the resistance, which may impact or may favor or upside momentum. Then we have also Glencore trading inside a big range. So we have a big range established, kind of a parallel channel. As we can see, we have the midpoint or the regression trend line of that channel. The midpoint of that channel exerting some pressure, in this case as resistance. 200% Fibonacci extension completed, so this is the default target for the edge and shoulders. Of course, we have a clear edge and shoulders there. Once the price breaks the support level, we expected a move towards 9.94. So I will not be surprised to see again the price reacting from this level of support and trying to bounce. Ultimately, if the price breaks below this level of support, I will target, and actually let me measure this pullback to the 78.88.6% Fibonacci level. So I will project I will project the golden Fibonacci extension below. Ultimately, that's the last move that I want to see for this stock. A break below the support level should force the search for the golden Fibonacci extension of the last swing high. So we are talking about an extension of all this swing projected below. Okay, so we will search for these $7.10 and the completion of the bullish crab pattern. We have Google. Also, someone asked me before on Twitter if this is a bullish situation, and I think it may be a bullish situation for Google. We have a clear cup and handle pattern formed here. So we have the handle, kind of a small pullback after retesting the previous resistance. And that being said, this may work as a support level. So if the price falls into these 38% Fibonacci retracement level, and that's the level that I will search for long positions for Google, 150.40. So if the price approaches this 38% Fibonacci level, that may trigger positions to the upside, and I think it makes sense after completing that sequence to search for more bullish or more continuation of this bullish momentum for the stock. So I prefer to wait instead of trying to anticipate that move from these lows, which can happen. I prefer to wait for the Fibonacci retracement level in order to gain more confidence and to support support the risk that I will take to assume this position. Google. Then we have General Motors, of course, another one that I shared before with you, 161.8% Fibonacci extension level, $50.23. I was expecting the pullback to the 50% Fibonacci level, failed just by a few points. We are already moving towards the previous highs again, so I will expect kind of a full V-shaped recovery for General Motors, and then from here we will see what will happen. I admit a small pullback again once we approach the highs, but I will of course expect in the mid-long term, I will expect more momentum to the upside. If that happens, if the price breaks above the resistance, we should start to track the possible ascending channel, of course. Goldman Sachs, I projected this bearish crab pattern at 519, 161.8% Fibonacci extension level. As you can see, it failed just by a few points, but a nice reaction to the downside, searching for the previous support level. There's something that we should, not in this case, not for Goldman Sachs, but I will show you also some of these price or similar price behaviors starting to unfold into a potential head and shoulders pattern formation. This is not the case, but I will show you next to this one. So searching for the previous fractal support level and a bounce towards the highs. But as we can see, the market failed to achieve the 38% Fibonacci level. And I will not be surprised to see, and that will depend generically, that will depend on the market's environment for that to happen. There's a lot of variables that may influence the equity market, but I will not be surprised to see a new pullback towards these Fibonacci retracement levels, the 38% Fibonacci level. Then we have also Harley Davidson, another one that I'm paying attention, and I believe that you should also pay attention to if you trade the equity markets. Harley Davidson, nice resistance at $38.80, nice edge and shoulders pattern format. We need to wait for a clear violation of the fractal resistance. If that happens, we should target the $42.05. That's a default target for that specific or that particular edge and shoulders pattern, of course, that may trigger a major move to the upside, but we always rely on the default projections for those patterns. But that could help, let's say, to trigger that move to the upside. As we can see, that's an inverted edge and shoulders pattern printed above the 61.8% Fibonacci retracement level. And if that happens, if that triggers, I will not be surprised to see a major move and a retest of these previous highs, and eventually the formation of this Gartley pattern, or even the crab pattern just a few points above. So let's admit a range or a cluster between Fibonacci extension levels that I think we should consider between the 127 and the 161.8% Fibonacci extension levels. Then we have the king of transportation, or in this case marine shipping. We have Maersk, another one approaching the golden Fibonacci level. This may work as a potential, or let's not a potential, but an eventual. I prefer to use the expression eventual edge and shoulders pattern formation. We have the golden Fibonacci retracement at 10.05. We have immediately below the 161.8% Fibonacci extension level. Again, I'm calling your attention to this price behavior. Train your brain to identify these false breaks of structure, resistance in this case. Usually once the market confirms the false break, we'll search for the golden Fibonacci extension level, completing the bullish, in this case the bullish shark pattern. I will expect a reaction to the upside if the price achieves this 975, the golden Fibonacci extension level. This may work as, or this may help the formation of the right shoulder for the eventual, as I said, the eventual inverted edge and shoulders pattern formations. Just to clarify, the default targets for those, or for that pattern in particular, the 200% Fibonacci extension level. I will show you the default 200% Fibonacci extension level. So if the price breaks above the resistance 1379, we should expect a move towards the Fibonacci, the 200 Fibonacci extension level, $18.57. That's the 200% Fibonacci extension. Just to try to give more a few cents to add more 2 cents to my analysis. Then we have Exxon Mobil, and of course we are we have a clear range here between 120.56 roughly and the support level 113.09. So we have a clear range for the stock. Let me decrease also into a 4 hours time frame chart. Something that triggers my attention, the structure support, is ascending trendline support, holding these lows. If the price breaks below this structure, I admit a move to the downside. Once again, calling our attention to a potential false break of resistance in this case. Previous structure highs, we have a new higher high threatening the breakout above. If the price breaks the support level, we will expect a move towards the golden Fibonacci. If that happens, that will complete the bullish shark pattern, which usually will target the 50% Fibonacci retracement level. So which means after completing this sequence, we may expect a move back to this current price zone. So if somehow you expect to short the market, be careful, because that may not be for longer periods of time. Okay, so eventually you just need to take what the market offers you initially and then jump out of the market as soon as possible, and as soon as you make some profits, of course. Even though, let's move forward, Visa now threatening resistance level. This is a nice fractal at 267.95. I admit that a clear violation of this fractal may trigger a decent move to the upside. Again, I will target the golden Fibonacci extension of the last swing low. We have multiple patterns emerging from here. We have the crab pattern already projected in my chart, as you can see, at the golden Fibonacci extension level. But we have also another sequence that we should pay attention to. And again, calling your attention to the false break of the previous support. Once the price breaks above the resistance, it will search for the golden Fibonacci level. So again, we are talking about the eventual shark pattern and the convergence with the crab pattern at the same Fibonacci extension level. Both patterns use the same move, in this case, this last move to the downside, to identify the completion point of the pattern. Okay, so this last move for Visa. For now, we're still threatening the resistance level, but as I said, if the price breaks above it, I admit more upside momentum. Let's go back to the daily time frame chart. Seagate. And this one, I confess, I'm not sure if I shared this one with you before. 88.6% Fibonacci extension level, retracement level 109.67, and retracement back to the Fibonacci levels. Failed to achieve the 38% Fibonacci retracement level, and usually the bat pattern once completed, I will not say usually will not fail, but once the price starts to react to the pattern, in this case to the downside, usually we will see the price achieving those 38% Fibonacci levels. Another thing that can happen, of course, kind of a three waves structure to the downside. I always like to project kind of a symmetrical pattern, and that will force the price to achieve those 38% Fibonacci level. But not only that, that may also put the price at the previous fractal support levels. Starbucks, nice double bottom. A violation of this resistance, 83.43, triggering that move to the upside. I believe I shared this pattern with you, and also the symmetrical projection a few points above. But we saw this, the formation of this double bottom. We saw the violation of the resistance level and the move towards the highs. Something that can happen, and let me delete for now these patterns because those are not relevant for now. We are now focused on another situation here. So as you can see, we have the golden Fibonacci retracement level acting as a level, as an element of resistance. This is the 61.8% Fibonacci level of this swing to the downside. We are facing the 61.8% Fibonacci level, and I will expect the same level to act as support if achieved. So at this point, of course, there's nothing to do, I believe. I need to wait for further developments, but if the price somehow achieves the golden Fibonacci level, we will talk about that 26.18 bullish setup. So we have again double bottom, broken resistance, new fractal, assuming this as a new fractal resistance above. If the price pulls back again to the 61.8, we will engage into a potential ABCD pattern formed above the resistance level. So we will assume kind of a symmetrical pattern. This is what we call the potential ABCD pattern formation, which points at 105.20 or 105.19. So that's my expectation. I'm not sure if that pullback will happen. I will not be surprised to see the retest of the retest of the previous resistance turned into a support, threatening to threatening to recover the fractal. Eventually, many traders will position to the downside, and suddenly the price will find support at the golden Fibonacci level and starts to bounce. At least that's my expectation after this nice and strong move to the upside, this impulsive swing. I will expect a pullback or a consolidation and then a new swing to the upside. And that's Starbucks. Let's move forward. Nvidia. Let's go again into a 4-hour time frame chart. I shared this one with you this week at the beginning of the week. Bearish cipher pattern completed at the 78.6% Fibonacci level. We expect a retracement towards the Fibonacci retracement levels, obviously, without breaking the previous highs. So we have the previous resistance at 140.76. The cipher pattern, it's not the best pattern to trade in terms of risk reward approach. We are trading from the 78.6% Fibonacci level, which means we have all this territory above our entry to consider as a risk price zone. Okay, if the price breaks above this fractal, the starting point of the pattern, that will invalidate the cipher pattern, and eventually the price will search for other price zones for sure. But when we identify the cipher pattern, and because we traded from the 78.6% Fibonacci level, we always need to consider the range between your entry level and the starting point of the pattern, obviously. And only a violation or a breakout above the highs will invalidate that sequence. So there's a lot of range or a lot of territory to explore for the cipher pattern. Okay, but as soon the price starts to react to the downside, we expect a move towards the 38% Fibonacci retracement level. Moving forward, Microsoft approaching the 50% Fibonacci level. This is what we may call an alligator mouth. That's an expanding triangle. We are now facing the midpoint of that range, so I believe this is not the best price zone to try anything with this stock. Of course, if the price recovers above the fractal resistance or breaks above these previous historical highs on Microsoft, I believe it may trigger more momentum to the upside. Not so sure if that will happen. Another pattern that may start to emerge, eventual edge and shoulders pattern formation. We need to wait for that pattern to start to unfold. Of course, that there's nothing granted, and even less if the price fails to break the support. So this is one of the patterns that always depend on the violation of the neckline in order to confirm. So, but if that happens, you already have our default targets, a 200% Fibonacci extension, $310. That's the default projection for the eventual edge and shoulders pattern formation on Microsoft. The next one, Morgan, another one already starting to unfold into this edge and shoulders pattern, the same pattern that I was discussing before. So we have the head, reinforcement of the support, kind of, and the potential right shoulder. So it's more clear without anything in the chart than with my draw. So basically we have a right shoulder now being formed. Actually, I believe this is kind of a golden Fibonacci retracement level, very close to it, actually nailing the 61.8% Fibonacci retracement level. So this may work as a right shoulder, and we will wait for the violation of the support level, which may trigger more downside. Now we have MetLife, another one unfolding to a potential edge and shoulders pattern formation, and this one may also trigger a nice shark pattern below. We have multiple elements projected below. Of course, this is pure speculation. We don't know if the price will achieve these levels, but if the price unfolds into these head and shoulders, of course we will expect a move towards the 200% Fibonacci extension level that points to $60.30. That's equivalent to a golden Fibonacci extension of the last swing high. So there's already convergence between some Fibonacci levels, but also the 61.8% Fibonacci retracement of all these swing to the upside. So we are also facing the 61, we will also face the 61.8% Fibonacci retracement if reached. For now, we are, of course, tracking the possible head and shoulders pattern formation from these levels. As I said, golden Fibonacci, actually, let's measure 50%. 50% Fibonacci retracement now acting as an element of resistance. Now, of course, we have McDonald's completed a bearish cipher pattern. That pattern completed at 289, 78.6% Fibonacci retracement level completed the bearish cipher on McDonald's, so I will expect a pullback towards the 38% Fibonacci retracement level. Of course, as I said multiple times, we can be wrong. Actually, we are not wrong because the pattern is here, but the market may not react to the pattern. So, and if that happens, of course, we may see the price squeezing higher. And if that happens, we should also pay attention to the retests of the previous highs. We have also the golden Fibonacci extension of the last swing low projected there at 302. So something also to consider on McDonald's. We are almost finishing. We have also Johnson & Johnson that I shared before with you on socials. The 113% Fibonacci extension level, this is a specific pattern. This is a bearish alt-bat pattern, alternate bat pattern, because usually we tend to project the bearish bat pattern at 88.6% Fibonacci retracement level, but sometimes the market extends above the starting point of the pattern, and once that starts to happen, we should also consider the alternate bat pattern. Not only on those situations, but usually we search for the bat pattern, let's say the bullish bat pattern. We search for that pattern specifically at the bottom of the structure. Let me try to identify that for you, or let me give you that example. Usually I search for the bat pattern, in this case at the bottom of a structure, in order to buy the bat pattern. Okay, I will not search for the bat pattern at the bottom of a structure, specifically the bearish bat pattern. If the price starts to approach these resistance levels, usually after printing a bottom, of course, usually I search for extensions above these highs. So again, I can search for, let's say, a bat pattern above. Okay, I can search for the bearish bat pattern. Actually, we have kind of a bearish bat pattern right there, but I can search for the bearish bat pattern at the highs. And once I see the price printing a new low, you know, the bottom of this larger move to the downside, the market prints a new lower low and starts to approach the resistance levels, usually I start to track the possible alt-bat pattern, or even the golden Fibonacci extension. As I said multiple times, I always take into consideration the last swing low or the last swing high, or the golden Fibonacci extension for the crab pattern. Okay, so at the bottom of a structure, we don't search for the bullish bat pattern, or actually the bearish bat pattern. If the market starts to bounce, we search for extensions. The opposite will happen once we trade at the highs or at the top of a structure. We search for the bearish bat pattern in order to bring the price lower. I'm not sure if I made myself clear, but I think so. If you have any doubts, just whisper or send me some matches. I can try to explain myself a bit better. But bearish outbat pattern completed at the 113% Fibonacci extension, 165.78, nice retracement towards the 38% Fib. I will not be surprised to see a recovery from these levels, and of course if the price breaks above this level of resistance, we may see more momentum to the upside. Of course, we are talking about a potential violation of this major fractal resistance level. And let's finish with one of the patterns or one of the charts that I shared today on Twitter. This is HP, so this is Hewlett Packard Enterprise. This is a company, enterprise company. I saw this edge and shoulder, this potential edge and shoulders pattern 1626. This is the neckline for the pattern, and this is one example of multiple patterns identified on this stock. We have a lot of shark patterns at the golden Fibonacci level. I called your attention initially to this process, the false break. In this case, we have multiple times that same price behavior, false break of support, again in a lower scale right here, and this one pushed to the 224% Fibonacci extension level, which is the second extension to consider if the price fails the golden Fibonacci extension. As you can see, the 224% Fibonacci extension reached, and once that pattern completes, the market starts to pull back. So at this point, I'm tracking, of course, the potential edge and shoulders pattern formation. So we have this left shoulder, the pullback forming the support, the new fractal at 1626. An approach to these levels again after printing this fractal resistance above. Of course, we are talking about 2282. New retracement, a new pullback, retesting the support level, reinforcing the neckline or the potential neckline. Let's see how the market will unfold from here. Of course, it will take some time. This is a daily time frame chart. It will take some time to unfold, but that's something that we should also consider for the next, let's say the midterm for the stock. So I hope, as I said, that brings some value to your journey, and I hope to see you in the next videos. Have a nice day.